Dividend and Interest, Part 3. IEPF has been set up by the central government since 2001. Examples of some amounts to be transferred to IEPF are matured deposits with companies, matured debentures with companies, etc. Modes of payment of dividend. Dividend payable in cash may be paid by check or warrant or by electronic mode to the entitled shareholder. Let's discuss the different ways in which dividend can be paid by company. First, dividend warrant. It is a check sent by a company to a shareholder for payment of dividend to the registered address of the shareholder. Second, dividend mandate. A shareholder may wish to get dividend credited directly in the bank account. Shareholder is required to send a request to the company in the prescribed form called dividend mandate. Dividend mandate authorizes the company to pay dividend directly to shareholders' bankers. Additional information. Benefit of dividend mandate. First, save effort, time and cost. It saves time of the company in preparing and sending the checks to the shareholders and simultaneously efforts and time of the shareholders to deposit the same and await its credit into the account. Second, reduces the chances of loss of physical check in transit. Third, electronic mode. Company can use electronic mode to pay dividend to its shareholder. A listed company has to mandatorily use RBI approved electronic mode of payment such as ECS, Electronic Clearing Services, NEFT, National Electronic Fund Transfer. B. Make arrangements with bank and in collaboration with other banks if required to pay the dividend warrants at par. ECS and NEFT both are electronic transfer fund modes. ECS is mainly used for debits and credits for low-value transactions which are frequent and repetitive, while NEFT is used for high-value transactions. Dividend warrants at par means check of dividend where payee gets exact amount stated in the check without any charge payable even if it is issued out of the state. Interim dividend, meaning dividend declared by the board of directors between two annual general meetings is called interim dividend. Interim dividend is paid in the middle of the accounting year, which is before the finalization of annual accounts for the year. Opinion of the company's auditors should be taken before declaring interim dividend. Features of interim dividend. The board of directors has the power to declare interim dividend. Second, interim dividend is only a payment on account of the whole dividend for the year. Third, company should provide depreciation for the entire year and not proportionately for a part of the year before declaring interim dividend. Fourth, interim dividend cannot be paid out of any reserve. Fifth, articles of association of the company must authorize the board of directors to declare interim dividend. Sixth, the board meeting has to pass a resolution for declaring the interim dividend. Seventh, the amount to be given as interim dividend must be credited in a separate bank account in a scheduled bank within 5 days of its declaration. 8. Interim dividend should be paid within 30 days of its declaration. 9th, unpaid/unclaimed interim dividend should be transferred to unpaid dividend account within 7 days of the expiry of 30 days of declaration, which is 37 days of its declaration. 10th, any amount remaining unpaid/unclaimed in the unpaid dividend account for 7 years should be transferred to IEPF. Interest, meaning in financial terms, it is a payment made for using money of another, which is borrower takes money from the lender. So interest is the cost of renting money for the borrower and it is the income from lending money for the lender. Features. First, interest is the price paid for the productive services rendered by capital. Second, it is directly related to risk. Higher the risk, higher is the interest. Third, rate of interest is expressed as annual percentage of principal. Fourth, rate of interest is determined by various factors like money supply, official policy, volume of borrowings, rate of inflation, etc. Fifth, interest is a charge against the profit of the company. Even if company makes no profit, interest should be paid. Sixth, it is payable at a fixed and generally predetermined rate. Company has to pay interest if it has borrowed money from creditors like debenture holders, depositors, bond holders, etc. Distinctions: interim dividend and final dividend. Meaning: interim dividend, it is declared and paid between two AGMs of an accounting year. Final dividend, it is declared and paid after the close of the financial year. Who declares? Interim dividend, it is decided and declared by the board of directors in the board meeting. Final dividend, it is decided and recommended by the board of directors. It is declared by the shareholders in the AGM. Third, authorization. Interim dividend, it can be declared only if articles of association permits its declaration. Final dividend, its declaration does not need authorization by articles of association. Fourth, when declared. Interim dividend, it is declared between two annual general meetings of the company. Final dividend, it is declared at the annual general meeting of the company. Rate of dividend. Rate of interim dividend is lower than final dividend, and rate of final dividend is always higher than interim dividend.